Should I jump right in?
Jump right in.
Okay, so we came to talk about the futures of money. Let's do a quick round of short introductions, just so you know who's in front of you. My name is Mushon Zer-Aviv. I'm a designer and educator and media activist based in Tel Aviv.
My name is Maya. I'm a futures researcher and practitioner. I'm the UNESCO chairholder in Images of the Future and co-creation at Erasmus Brussels University of Applied Sciences and the Arts.
I'm going to try to top that. My name is John Sweeney. I wear a few different hats. One of them is also as UNESCO chair in anticipatory governance and sustainable policymaking at Westminster International University in Tashkent, Uzbekistan.
If somebody wants to offer me a lecture or like a speaking gig at a university, I'll be glad to take it. My name is Johannes Kleske. I'm a critical futures researcher and currently senior director of foresight at the design consultancy Eden Spiekermann here in Berlin.
And we have Orit Halpern at the top right.
Hi. I'm the Lighthouse Professor and Chair of Digital Cultures at Technische Universität Dresden. So excited to be here, even if virtually.
So Orit really invested in this panel by giving us a sense of time and getting COVID. So thank you, Orit, for that. That was a bit over the top, but we really appreciate that.
No worries. I'm very sad.
So I'm going to start us with a short story, and I'm going to be a good Jew and tell you a story from the Bible. That's what we do. So I'm going to tell you about one of the biggest douchebags of the Bible. Back in the book of Genesis, there were a lot of douchebags in the Bible, but this specific one was called Joseph. Joseph was one of 12 brothers. He had some sisters, but they didn't used to actually talk about that. But and the guy was really obnoxious. He was going like, "Oh, you won't believe what a dream I dreamt last night. And I know what it means. I know the meaning of, you know what all of you guys are going to bow in front of me. All of my brothers are going to bow in front of me." And they were like, didn't go so well with his brothers and, sisters. We don't talk about sisters back in the Bible. Basically, they had enough of him, and they decided to do what you do with a brother that pisses you off. Kill him. One of the brothers was not into killing his brother, so he said, "I have a better idea. Let's sell him as a slave." So they sold him as a slave, and they fooled his dad, Isaac, to believe that he's dead. Fast forward a couple of years later, the slave Joseph finds himself in jail in Egypt, where he finds one of the ministers of Pharaoh. And apparently, the minister was thrown in jail for not being able to solve Pharaoh's dream. And Joseph, who was very good at solving dreams, was brought in front of Pharaoh. And Pharaoh told him, obviously it was like pretty high stakes. Either you solve my dream or you die. Pharaoh was saying, "I had a dream. In the dream, there were 7 skinny cows, and then, 7 fat cows, enjoying themselves, eating grass and everything. And then 7 skinny, scary-looking cows came and ate them." And I'm like, and Pharaoh was like, what is this dream? I keep having this dream. What does it mean? And Joseph, with his famous confidence, was saying, "Oh, no problem at all. We're going to have 7 years of plenty, followed by 7 years of famine. what this dream means, that you need to save during the years of plenty and to be ready for the years of famine. And indeed, Pharaoh was immediately convinced by this story, made Joseph the kind of head of that project, and he was and what we get from that story basically is the first story of financial prediction, right? And what do we have there? We have imaginaries, we have images of the future, we have strategic planning, right? And apparently, it's still a thing. And this balance between how do we imagine futures and how do we work with finance is still with us. And maybe, Maya, do you want to pick up on some of the terminologies that we found so kind of translucent or trans...
Well, everybody understands that when you type futures, just the word futures, in a web browser, you find futures and options. You find a financial instrument. And well, we have lots of words about speculation. If I say them to any of the non-futurists in my environment, they don't think that we mean, you know, thinking about possible futures or preposterous futures. They think that we're speculating and making more money. And the words like that are overlapping all the time. And I think that one of our speakers will have a few more of those. And yeah, so there is a big association between what's going on in finance and what's going on and futures. It's as if we're suggesting that that's actually what makes futures.
As if they're one and the same. And I think that would be a good point to switch to Orit and take us off with the first provocation.
I'm gonna try and start my slideshow, and let's see, wait, hold on, first I have to share my screen. Share screen. Let's see, now I have to go into wondering if I can pick the section. Okay, well, you know what, I'll just use the regular slideshow. Okay, so thank you, and I'm excited to be here. I just opened, since this is about capital, kind of cash, I have to start with a plug for my own book. But anyway, so this is work sort of coming from my Smartness Mandate book that just came out. But my provocation is, of course, just to follow up on Maya and actually also Mushon's question of dreams. My provocation is actually to think about the Black-Scholes derivative pricing equation. One of the main ways we're automating the contemporary betting on futures. And to think about that, I actually want us to provoke us by thinking about this particular quote by Fisher Black. So in 1986, Fisher Black, one of the founders of contemporary finance, made a rather surprising announcement. Bad data, wrong decisions, excess data, fake news all make arbitrage profitable and possible. In his famous article, Noise Trading, Black posited that we trade and profit from misinformation and information overload. In fact, noise makes trading in financial markets possible. We are forced to act largely in the dark, so we don't really know what we do. So noise, as in like very arbitrary things, and you'll see this little bouncing bubbles. That's my other provocation, the kind of random walk that's in these equations. Noise comes to equal value in this case. So in an age of meme-driven speculation, energy-burning cryptocurrencies, NFTs, democratized options trading, such a statement might seem common sense, even natural. Does anyone, after all, really think a cryptocurrency named as a joke for a small dog or an almost bankrupt mall-based game retailer is intrinsically worth anything? Much less billions of dollars? Of course they do. For the past few years, great fortunes and major funds have collapsed and risen on just such bets. In retrospect, everyone has perfect clarity about value investing, while at the same time, no one does. Irrational exuberance, to quote Federal Reserve Board Chairman Alan Greenspan in the late 90s on the dot-com might be the term to describe it, but Greenspan might have gotten it wrong on one point. Irrational exuberance is not the sign of market failure, but market success. For Black, who was a student of Marvin Minsky, and actually I have a whole history I could tell you about the relationship directly between artificial intelligence and the automation of decision-making in economics, invented one of the world's revolutionary trading instruments, the Black-Scholes options pricing model. Irrationality was not an exception, but the norm, the very foundation for contemporary markets. And that's my second provocation. What does it mean when irrationality is our main form of rationality? Noise, Black argued, is about a lot of small actions networked together, accumulating in greater effects on price and markets than large, singular, or perhaps even planned events. Noise is the result of human subjectivity in systems with too much data to really process. The idea that we're all networked together, making decisions within frameworks of self-organizing systems that cannot be perfectly regulated or guided is ubiquitous today and integrated into our smartphones and trading apps. Furthermore, as you might notice, this is the language of mathematical theories of communication. And indeed, of course, there's a relationship that is exactly the models they were taking were from models of theories of communication. And this concepts, of course, are now integrated into our everyday financial trading on platforms. Furthermore, from behavioral scientists to tech entrepreneurs and political strategists have regularly come to believe that human judgment is flawed and that this is not a problem, but a new frontier for social networks and artificial intelligence. Therefore, we need to augment our intelligence. We don't think enough. We're not fast enough. We can be replaced by these more intelligent machines. Only networks are apparently reasonable. This idea that human judgment is flawed or corrupt and that markets can neither be fully regulated or fully predicted. So there's a real question here about predicting the future. So apparently, unlike Joseph's story, financial markets are predicated on uncertainty that needs to be managed or somehow automated. This belief in the fallibility of human decision-making has long been central to the automation and computerization of financial exchanges and central to neoliberal thinking. In fact, back in 1945, in the quote that I'm showing you, the very famous Austrian-born neoliberal economist Friedrich Hayek wrote that the rational economic order is one of knowledge that never exists. The economic problem of society is a problem of data, and it is a problem of the utilization of knowledge not given to anyone in its totality. So this is really critical, and this is provocation kind of number 4, which is like, let's think about this citation. What does it mean to assume that human beings are fallible and need to be networked in order to make reasonable decisions? Human beings, Hayek believed, were subjective, incapable of reason, and fundamentally limited in their attention and cognitive capacities. At the heart of Hayek's conception of a market was the idea that no single subject, mind, or central authority can fully represent and understand the world. Responding to what he understood to be a failure of democratic populism that resulted in fascism and communism, he disavowed centralized planning or states and instead posited a new idea of intelligence and rational decision-making for the future. And that included the rethinking and the reimagining of the market as one, markets are about coordinating information, not matching supply and demand. So markets are processors of information in this account. That's something we take as a given today, of course, but it's important to note there's a history to that, and Phil Murawski has done great work on this. 2, the model of human intelligence here is one of network decision-making. Models of learning and using knowledge is ground the idea of a networked intelligence that's embodied in the market. And finally, it's kind of environmental. Markets are allowed the creation of knowledge outside of and beyond the purview of individual humans. Notions of cognition and decision-making are dispersed into the world. So if we're all kind of unreasonable, irrational, kind of working in the dark, how can we price the future? How do we predict things? Ergo, enter Black-Scholes. So though it's traditionally been difficult for traders to determine how much the option to purchase an asset or stock should cost, up until the 70s, it was widely assumed that the value of an option to buy a stock in the future would somehow be related to the, health and profitability of the company that issued the stock. This understanding not only is, this has a lot of assumptions in it. In 1973, Black and his colleagues, Myron Scholes and Robert Merton, introduced this options trading model in order to provide a new way to relate options prices to the future. And they took from the ideas that Hayek had, but also the work they had done in artificial intelligence and computing to come up with this model. What made this model unique in the history of finance was that it completely detached the price of an option from the expectation about the likely value of the underlying asset at the option maturity state. Instead, the key value for Black and Scholes was the expected volatility of the stock, which meant the movements up and down of the price over time. So they basically put a random walk together with a normal curve. The Black-Scholes option pricing model, in other words, was not interested in the true value of the stock of the underlying asset, but the relationship of the asset to the market as a whole. Scholes and Black had actually come up with this while working in starting to automate financial decision-making in investment firms, which involved applying computers to modern portfolio theory and automating arbitrage. Scholes and Black opened their essay with the pricing of options and corporate liabilities, really important if you're into finance, with this statement: if options are correctly priced, no one could possibly make money. So in other words, since people do make money, options cannot be correctly priced, and mispricing, that is imperfect information transmission, must therefore be essential to the operation of markets. This also meant that traders could not even in principle be rational. So no one's rational in this, in deciding the risk assigned to an option. As a result, the insights of reasonable traders might matter less in pricing an asset than they would in measuring the volatility of the stock. So these markets are full of noise, and the agents, the traders, and within it cannot know the relationship between the price of the security and the real value of the underlying asset. However, if agents recognize the limits of their knowledge, so if we recognize this, they can focus on what they can know, namely how a single stock price varies over time and how that variation relates to the price variations of other stocks. So within weeks, this became super popular, leading to the introduction by the 80s of the Bloomberg Trading Index, which you can see here, the computer kind of in front of the older market where people used to trade in person. So within weeks of the article's publication, numerous corporations offered software for such pricing equations. And this was part of the consequence that the model joined, communication and information theories with calculation as the best way to decide the future. As individuals followed Black and Scholes in creating more complex derivative instruments, computers became essential. You basically can't have a derivatives market without a computer. Humans just can't make these decisions, and this is about automating human decision-making. And it's really interesting to think about the history of artificial intelligence in relationship to the history of economics and automating futures and futures betting. As individuals followed Black and Scholes in creating more complex derivative instruments, computers became essential both for obtaining data about price volatility and calculating option prices. An entire industry, the financial, was born from this innovation and its new understanding of noise, a literal measure of entropy and variation. Since the 1970s, derivative markets have grown massively, around 25% per year over the last 25 years, to now exceed the world's GDP by some 25 times. There's also, with this, of course, increase in financialization has also been an increase in inequity. And that's one of the final provocations is to kind of ask about the relationship between automating the future and the violence and inequity it engenders. There's also a deeply repressed geopolitical history behind these innovations in finance. These turn to kind of technical solutionism came in the heels of the end of Bretton Woods, civil rights, decolonization, the OPEC oil crisis, to name just a few of the major global transformations taking place at the time. The Black-Scholes model can therefore be seen as an attempt to tame or circumvent extreme volatility in politics, currency, and commodity markets. New financial technologies and institutions such as hedge funds were created in order to literally hedge bets through derivative trading equations to ensure that risks were reallocated, decentralized, and networked. Derivative pricing instruments emerged specifically to deal with the volatility and inflation from events such as OPEC oil and the petrodollar crisis of the 70s. Through the likes of derivation technologies such as short bets, credit swaps, and futures markets, dangerous bets can be combined with safer ones and dispersed across multiple territories and temporalities. Corporations, governments, and financiers flock to these techniques of uncertainty management in the face of seemingly unknowable, unnameable, and unquantifiable things they could not reasonably predict or know. So this is a mode of uncertainty management in a world we always operate in the dark. The impossibility of prediction, the subjective nature of human decision-making, and the electronic networking of global media systems all became the infrastructures for new forms of betting on futures while evading the political economic struggles of the day. So to sum up, this leaves us with a few questions about what the future is in options trading, and not only some provocations. So futures are noisy, distributed, automated, uncertain, dark, relational, volatile, irrational, false, racist, colonial, not to mention many other things. How do we think about what it means to automate and network intelligence, and how it relates to how we're producing futures and how we're speculating? And I'll end there. I hope that was 10 minutes. But.
Thank you, Orit. Yeah, we'll take it. We'll jump right to Johannes, to your provocation, So the main point here basically is that the future is not precise, and that's why you can make more money of the imagination, right?
For sure, and also. It's really to think about the kind of models we've naturalized about human decision-making and the need for networks and collectivity as a central feature, both of market decision-making, but maybe of alternative politics as well. So what can we learn from finance, I guess, in a way to hack or rethink these models that have emerged from them?
Great. Johannes?
All right. Good morning, or good day. So I thought, so maybe my first provocation is a very humble title for a 10-minute talk. Let's dive into that a bit more. So I'm going to switch gears a bit and talk more of the perspective of foresight and futures research. So as I said, I'm a critical futures researcher. All the important links you find down here. So just to get really started with the basics, I don't know how many of you are familiar with how futures research or future studies looks at the idea of the future. So the important part to know is that the future, in our understanding, only ever exists right now in our heads. It's like what we imagine a future time to be like. So we speculate, we imagine, we think ahead, we have expectations, we have hopes, we have fears. And this is how the future exists right here, right now, only in our heads. So this is like a typical way to display that is like we're looking into the future, and the farther off we look, the more broad the realm of possibility and of possible developments develops. And so we have different scenarios and futures. And actually that is quite close to how capitalism works. And like Orit already showed that capitalism only really works if we have an open, uncertain future, and we can invest now to gain revenue in the future. But because it's open and uncertain, we have to find ways to make decisions. So what do we invest in, where we go to that? And I'm going to lean a bit more on Jens Beckert, whom you read about in the introduction to this panel, who is an economic sociologist. And he said that capitalism is an economic system in which the present is assessed principally through the lens of the future, which is itself considered using imaginaries of future state in order to anticipate as yet unrealized profit and losses. So capitalism wouldn't be possible without the future, without thinking about the future, without speculating about the future. And he says, and like Orit already mentioned, the future is very uncertain. And there's a huge huge in economic theory who always think about like the rational actor theory and think like people are very rational and very calculating. But with a genuine uncertain future, that is actually impossible to do, to have like really clear rational decisions. So what do? The simple answer is we tell stories about the future. And the economy and most parts of our world are nothing else but telling stories about the future in the hope that will be the stories that become true. Beckett calls them fictional expectations. Like we we think of them, we imagine them, and then we propose them. So he says actors use imaginaries of future situations as interpretive frames to orient decision-making despite the incalculability of outcomes. So if a manager in a company, for example, makes a decision, he can try to like really get a lot of data and see where we've been and where we might go, but he can never be sure. He can never know exactly that this is something. And although most of them will deny that, in the end, it is the story, the expectation, the story that they tell themselves in the mind about the future that then in the end will help them make the decision. So it's their fictional expectations that will do that. And the interesting part is that actually works. Because this is how we as society, and not only in economics, but in all parts of society, this is how we as a society deal with uncertainty. We tell ourselves stories about the future, and the more people believe the same story about the future, the more likely that story is actually, or that image of the future is actually to become the real present. So this is really interesting. Like we used to call it a self-fulfilling prophecy. And it's really about, so these fictional expectations help all the actors to coordinate their decisions in the face of uncertainty. Thus, they can affect the future. So what we experience every day is a public discourse and actually a public dispute about what the future should be like. And everybody's trying to win over the other ones. Jens Beckert says, power is expressed in the creation and influencing of expectations. So this is the battle that's going on. So if a politician here at Republica on stage tells you, this is going to be the future, there is no alternative, then he's not making a prediction. He's doing an invocation. He really wants to say, oh yeah, that's right, that is the only possible future, and I'm from now on going to act as if this is the only possible future. And the more people the politician can convince to do that, the more likely this is actually going to be the actual future. And this is what we constantly can observe and are a part of ourselves. And I think Audrey Waters really summed it really well. The best way to predict the future is to issue a press release. So you know, like the famous saying, the best way to predict the future is to invent this, and the easiest way is to do a press release. And this is where I come to my provocation, because I thought there's no way that you can sum up the role of futures in capitalism and even beyond in just one tweet. And along comes Ben Evans and says, hold my very fine British lager, and says this: A16Z is a media company that monetizes through venture capital. And just to unpack a bit what's going on here. So Ben Evans has been a very internationally renowned expert on everything technology for, I think, the last 2 decades. And he worked for A16Z in the last years. He's not working there anymore, but he has been working there for quite some time. Andreessen Horowitz, this is like the full name, is of A16Z, is a venture capital firm. And it's a very famous venture capital firm. It was founded and still run by Marc Andreessen, is one of the guys. Marc Andreessen is the guy who invented Netscape and things like that, and he's maybe one of the most renowned venture capitalists in the world. Also known for having a very strong opinion, being like pro-colonialism and stuff like that, and really likes to block people on Twitter who disagree with that. So this is like the background to that. And it's really interesting because what they're saying here is that, so venture capital makes their money by creating funds and then invest in early stage startups or later stage startups with the hope that some of the startups they invested in will then, like 10 years later, exit for 10x, 100x the amount they put in. So this is how they make their money. And they say, okay, so we can invest into this startup and then hope for the best, maybe help them a bit so that they do everything right. But what if we can actually make success much more likely by telling everybody that this startup or this field of startups that we're investing in really is the future? And this is what they've started to do. So like the most famous saying of Marc Andreessen is, software is eating the world. Again, this is not a prediction. This is an invocation of trying to tell everybody, this is the future. Everything is about software. It's not that he believes that but he wants you to believe that that is the case. And this make it more likely that all of his software startup will exit successfully and he will make a lot of money. And this is why I think this is such a brilliant quote here, because it really explains how this thing now works in capitalism and in all of society. It is, so they basically they started to constantly put a lot of content out there, a lot of reports out there, a lot of studies out there to really influence public opinion about what they think is or what they want the future to think is the actual future, the most likely, the determined future. And you saw it over the last couple of years, like with the metaverse and cryptocurrencies and all of these topics where all of a sudden all of venture capital is like, this is the future, everybody's got to go in. And then they really hope that we have a very short-term memory because like a couple of months later, no, forget what you said yesterday. No, this is really the future. You have, this is what we really have to put our money in. So whenever somebody says, this is the future, there is no alternative, I'm absolutely sure, be very aware of that. Because that usually is not a prediction. It is the try to influence you about what that is. And it's really important to then look at that. And this is where I'm going to end on quickly putting my critical futurist hat on. So the idea of the critical future studies is to not create new images or scenarios of the future, but to examine, to deconstruct existing ones. With the idea, and Ayatollah said it really nicely, to loosening the future. We often have the feeling like the future is very fixed and determined. But it's not that, it's just like people want to give you the idea that it's very fixed. So here's just to finish on that, here's a couple of questions. Whenever somebody says, this is the future, here's what you can ask. Who is saying that? What might their interests be in proposing this specific future? What might venture capital have in its interest when they say cryptocurrency is the future? Why do they say that? Who is winning and who is losing in this future? And my favorite question always, who's not even in this future? If you look at like those fancy future vision movies of like an automotive company or something like that, always ask, who's not in this movie? Who's left out? Who's not existing in this world? Because that will tell you so much about the worldview and the values that this future proposes and that is based on. And this actually is then an opening, and you can use it wherever you want to, in more like societal contexts or in like climate contexts, wherever you want to. Always ask, so if this is a future based on those values and worldviews, what if I switch those values and worldviews to the ones that I'm more in line with? What other alternative futures might emerge and give us a different understanding of what is actually possible, creating alternative futures, and by this, loosening a very determined future. Thank you so much.
Thank you.
Yeah, that was great. I feel like we just had that happen this week with Apple's vision, right?
Oh yeah. You remember like last week when everybody's still like, so the metaverse is over, right?
Yeah.
So Zuckerberg.
Wait. Yeah, we're running after that. Yeah. John,
Okay.
take us off.
really hard acts to follow, but you had Orit on Zoom and Johannes stood, so I'm going to sit down. Maximize your diversity. I will, I suppose, preface my provocation by saying that it lies somewhere at the intersection between egomaniacal narcissism and self-immolation, which is to say that I want to position myself as the futurist, the consulting futurist. What is it that these organizations, institutions in finance and economics, and even the state want from a consulting futurist? But let me preface my preface. Does anyone here work for a central bank? Okay, we'll be totally fine. Great. So I'll initialize with a quote from an amazing book called Exterminate All the Brutes, which is by Sven Lindqvist, which is his critical reading of Conrad's Heart of Darkness, and an amazing autoethnography, which is what I'd like to bring forward. He says, "The omission of all that is personal makes the scientific self into a fiction lacking any equivalent in reality." So I find myself often as the futurist, in a room, in a space, invited, paid, sometimes very well, sometimes not, but being asked, what is the future? And as Orit, I think, has very eloquently and very critically laid out, oftentimes there is a fascination with precisely this challenge, the signal to noise. How is it that an organization or institution, as also Johannes had noted, can bring some clarity and really, I think, invocation, but also maybe even incantation, to bring about and bring forward these futures. So I want to tell two stories. The first story is from 2017. I had washed out of the International Federation of Red Cross and Red Crescent Societies, where for a glorious 9 months I was the Global Futures and Foresight Coordinator, working for the world's largest humanitarian organization, a dream job for a young, idealist futurist, now a long time ago, wanting to find my way to help make the world a better place. I still continue to sometimes advise them and work for the UN system, but the idea was that that was over. And so what next, which is a question that futurists should be good at, right? Got an email from a buddy who had a startup in London and said, hey, would love for you to come in as our chief futurist. And so similar to Lindqvist, my own Heart of Darkness was then relocating to London, working for a, dramatic pause, a cryptocurrency startup called Etch, which actually I felt had a real social purpose and good. So the aim was, and still is because it was never realized, was to focus on liquid money. So the idea was to really attack the absolutely, completely vampiric industry of payday lending, and essentially to try to create a situation where, quite simply, you work for 8 hours, you leave work, you get paid for 8 hours of work. Why would you have to wait 2 weeks or a week and a half or whatever it ends up, right? So the idea of dynamic adaptive payroll and to leverage blockchain as a technology to be able to do that. Now, functionally, the technology worked. The technology was actually there and relatively suitable given the challenge. However, couldn't actually find a private sector organization who was interested in taking this on because the incentive structure simply wasn't there. So what's the incentive structure? Well, happy employee, they didn't really care, a more streamlined, efficient payroll system. Well, that doesn't, can you prove it's going to save us a lot of money? Why would we change this, right? So there were lots of questions that really came back to command and control, the types of futures that were being called forward, but also I think quite honestly, and this is where I think the ethics of the foresight practitioner are essential, what are the forces that I think with Orit and Johannes already laying out are actively trying to colonize the future? So we actually ran up against a lot of resistance precisely from within an organization about this regulatory space. And we actually met with the Treasury in the UK. Is this within the context and confines of what is acceptable? And so what is even feasible, right, from a regulatory perspective? And so it was actually coming really face to face with the monsters of the future, with realizing that it's not just that you find a lot of different organizations attempting to invoke the future or use incantations, but those structures at very deep levels, and this isn't a tinfoil hat moment, but the actual structures that literally have the future colonized. And so this was a really unique moment in my own practice to really confront the state in a dynamic way. So that's story number one. Story number two is 2 weeks ago, I was actually in Southeast Asia consulting for a unnamed central bank. And this central bank doesn't have to remain unnamed for any reason other than I would like to actually go back to that country at some point. And they are part of a broader group that is experimenting with central bank digital currencies. And a lot of this is actually being led regionally by China, who is providing technology and really looking to gain a foothold, right, as we've heard, of course, relative to the positioning of the yuan and the implications thereof. So there's a lot of soft power, but also not so soft power in this dynamic. And specifically, what I found quite interesting, and given that this happened just 2 weeks ago, was this almost childlike fascination with, of course, I think what we've all felt recently, the sort of promise and perils of, quote, AI, right? And its explosion of large language models. And what was really fascinating was continuously this asking, or this really bringing forward this invocation of, tell us the future. What is it going to be? So I wanted to go back and play with this notion of smartness that Orit brought forward, because I think actually what I've found is there really is a spectrum. Right? There are those with maybe, let's say, a higher degree of access relative to maybe even a proximity of a particular space, whether it's New York or London or Silicon Valley, and that kind of diffuses out. So here was a central bank, right? Sort of ne'er-do-well, like looking to do what it has to do as a regulatory agency to protect, right? To ensure that policy is effective, but also affective, that it brings forward, hopefully, better for its citizens. And yet was really, in many ways, chasing rainbows relative to how they might deploy a large language model, in getting people to be able to engage. But also specifically, really feeling like it was within the shadow of a larger actor having to actually find its way to be in this sort of digital currency space. And I think for myself, and part of the reason to bring forward this as autoethnography is, I think similar to Johannes, and as we've heard from Orit as well, it's how can I keep the future plural at every moment? So how do I not foreclose the future? How do I not bankrupt the future? And realizing that actually at a certain point as a practitioner, and maybe we all have this moment, like I go away, right? So I disappear from, the scene, right? In the third act, I'm not on the stage. And so that moment of how to create this space where there is this lasting sensibility about possibility, about potentiality, but also about purpose, and not just purpose in the sense of organization and aim, and of course that looks very different relative to a blockchain startup versus a central bank, but what's the broader purpose, and is there a broader purpose? And so I think from my own perspective, it is oftentimes this really kind of emergent dynamic moment when you realize, and oftentimes it's speaking to those who are really attuned to it, but trying to create that attenuation of what can we bring forward as a practice, and what is our responsibility to bring forward, and what are the futures that inherently I'm biased towards, realizing that I want a more equitable future where even within this particular context, that accessibility is there, and if there is this future with a digital currency, what does that look like, relative to being able to create that equity? And clearly, there were some ears that were more receptive to that than others. And so this question around how do we find ways as a practice to ensure that questioning is, one, I think done in earnest, right? That it actually is done in a fruitful way and an honest way. And two, how do we actually find ways to sustain that change, realizing that as an outsider, which is, again, a professional choice, that I have real limitations. And so for me, that was something to bring forward, was confronting that smartness and sometimes the lack thereof, and then confronting the realities of what organizations are willing to question, right? Whether it's a startup seeking to question the big powers, or a government maybe even unable to question itself. Thank you.
Thank you very much. So just to place us on time a bit, we have just a bit more than 10 minutes to continue this conversation, which is going to be continued in the space in the back. So see that as a complete kind of smooth continuation, as if nobody noticed that they've moved, right?
This is just a teaser.
Exactly.
Isn't your talk in the afternoon about teleportation?
Yeah, I'm going to. We're all going to be teleported into the room in the back. But for now, I want to bring up, and I think one of the amazing things that Margaret Thatcher brought us is that statement. There is no alternative. And I actually really like the way that it's abbreviated into TINA, T-I-N-A, making it a thing. There is no alternative. It's a thing. It's a thing. It's a framework of seeing the world that is, as we've seen as speakers saying, is very much about creating futures rather than telling you what the future will be. Can you like, what is the role of futures in that sense? Like, to some degree, especially when John, you were talking about working with a bank, they get to. I really like this quote from Tony Fry, a designer, saying, "Design cancels futures. It's about canceling futures." And by that, allowing some futures to happen, not others. What kind of designing happens in banks in that sense?
I left out the story about the private bank, right? I told the startup and the central bank, but there is a private bank story that maybe after a drink I could tell at some point. I think it is that movement to cancel the future that I've felt most powerful with the central bank, and even then with the private sector, right? Because actually, and I think to Orit's point, like there is this real desire to suffocate futures plural. And so I think that movement is I quite felt, right, as a practitioner. And I think what I've really found challenging is to again keep that futures plural living and breathing. It's a real dynamic challenge. And so I think from a design perspective, I think oftentimes they design an experiment out of a workshop or something, right? And it often is quite pathological with a technological adoption or application, right? And it's almost the kind of stuff you thought of walking in, right? Because they're sort of doing that already. So I think from my perspective, it also relates to the dynamics of the engagement. So in some of these engagements, they're being watched, which sounds Orwellian. It is a little bit, right? They're being monitored how they're learning and what they're producing. So, and again, relative to context. But the idea that actually there's a few futures at work. There's their own future they're trying not to cancel, right? So they're in a leadership development foresight workshop, producing stuff that their boss can approve that seems legitimate to the organization, but also has the right level of word salad that the future people are going to approve, right? So there's a bit of that sort of performativity, but I think the functional outcome is always quite and again, for some of them, not all, but in finance and banking, where I haven't done a lot of work, but where these requests do come, it really is about tell us what we can do with X to get to Y, yeah? And it's amazing how functional it is. And even by the third day, still beating back that like sensibility, like quite in a profound way.
Can I speak?
Yes, Orit, please do.
Just to Mushon's question, there is actually a famous quote by Milton Friedman, regularly cited, that economic models are machines, not cameras. And that's to say that they don't represent markets, they make them. And so market design is actually a topic, but also there is a reality that these instruments are actually making worlds. And so there's a really interesting relationship here between the conversation about the stories we tell and what it means to kind of, I guess, create futures through these mathematical terms, and how do we link between those two, or how do we intervene one into the other? There's always an intersection, but I just wanted to kind of mention that actually, you know, these instruments, these financial instruments, are writing futures in a certain way.
Thanks. Yeah. Johannes, did you want to add to that, or?
I can add a bit to that, because when you said the thing in your talk about the trying to keep open as many possibilities as there can be. I think I also at some point wrote down for me, like, my mission is to fight Tina wherever I can. And the problem with that is, if you do that, especially in Germany...
Clap, you can clap.
So the problem if you do that in Germany, this really clashes with what I showed you before, with the idea that this is how society organizes for uncertainty by agreeing on a certain future. So if you challenge that, there's always pushback at first. There's like, but wait, if we don't follow the route that everybody else does, if this is not like this certain future, this really is uncomfortable, because what are we then basing our decisions on? So we can just follow the rest. So we don't actually want that, and you have to work through that uncomfortableness to go to then to and see if they're willing to follow you, create more alternatives, and because this is where actually innovation happens. If you not follow the path that everybody else follows, but say, wait a minute, there are more paths. What if we go not this route that everybody else is going, but go this smaller route? It has more risks, but nevertheless, there can actually come something new out of that, like a different way. So this is, for me, the challenge, but also the mission.
Thanks to all three of you. It was wonderful to hear how your talks did connect. And one of the things that I thought they connected through is something that was actually in yours, Johannes, is that when you're acting, with smartness, and when you're refusing when you're refusing alternatives, what are you looking for? Well, in your questions, there was this question about winners and losers, and that's also what keeps us together, what keeps people together on one path. You don't want to walk with a loser. You are going to walk with those people that you think whose images of the future are going to be the winning images. And those are the images that become dominant in the present and that have been. And it's not like the dominant image of the future, let's say continued growth to keep things simple and with Jim Dater. It's not like we had a different one 10 years ago and a different one 20 years ago, or a different. So this is, a very thick present. That present in which we think we know where to walk with the winners. And I think that that's something that does really connect all the provocations of your three that the three of you did, for which. Thank you very much. We have 3 minutes left. Over to you.
Yeah, so I want to continue from that point specifically, because one of maybe the first provocation that we had today in this panel is the fact that Orit couldn't join us, and that happened because 3 years ago something happened to the way we think of futures, right? And I would like to try to think of how can that be a certain inspiration for the question, do we really know what the future is going to be like? We all experienced that specific moment where our thick presents were cut off immediately. Can that maybe inspire anything that has to do with the future of money? I know it's a big question for the next 3 minutes, but that's why we brought these people.
Orit inspired it.
Yeah, I don't know if I was inspired. I think it can, because one of the things that we learn from these new models of the recognition of how networked and technologically dependent we are is that every breakdown, every pandemic, every situation actually reveals the construction of the infrastructures that put us together. And there's always a political opportunity in that, as well as a way to disrupt. What we're talking about, which is really obsesses me, is the convergence between biological and technological determinism that's currently shaping futures. I think one of the things that these radical crises can create, I'm not saying crisis is great, but is also moments of extreme visibility about the inequities and the ways that infrastructures actually work. Certainly, COVID made actually finance incredibly visible. The stories that Johannes told us about were so prevalent, and the incredible shift of capital was so visible, actually, that these are moments that actually allow us to really ask who's benefiting, what's happening, who loses, who doesn't. How come people are profiting? These markets are skyrocketing, and while people of color and poor are dying. And so it makes incredibly potent and visible those power structures in ways that I think, Black Lives Matter. I mean, there were anti-austerity movements in Chile. I mean, I can name movements that mobilized this moment in really strategic and important ways.
Which
not always. I don't want to say it's good. Don't get me wrong.
Well, you'll have to quote Milton Friedman again.
Right. One last time about machines, not cameras.
No, about the ideas lying around. Anyway, yeah, I'm not sure I remember that quote specifically, but Milton Friedman, who has amazing quotes and other problems. One
of the conceivers of disaster capital.
It's like balance, yeah, right. We're closing with that, not closing, but transitioning with that. A crisis. I'm paraphrasing, but when a crisis comes, the policies and the decisions that will be made will be set by the ideas lying around. And of course, he talked about what Naomi Klein later referred to as disaster capitalism. But it's actually a very good quote, and we should learn from it. We need to have the ideas lying around, because when the crisis comes, and there are crises coming all the time, we are in continuous crisis mode. There's opportunity. There's opportunity because Tina is not there anymore. And that's the note to enter a song by Tina Turner. But that's also the note for us to transition to the other space where we're going to have to continue these conversations, and with a bit of an interactive part as well. Face-to-face. So thank you very much.
Thank you.